What's up, everybody, and welcome back to another edition of DIY Money.
DIY Money.
What's shaking, Logan?
I don't know what's shaking with you, Howard. You have a more interesting life than I have.
That's not true, because one of us is buying a house, and their wife's graduating, and you're getting your life back, and you're in a wedding, and don't give me that.
That's true. Yeah, I'm in the life stage right now where we just have a million weddings. I know we've talked about this before, but we just have unbelievable amount of weddings. It feels like we have a wedding every single weekend.
Because
we have one this weekend, then we have one in 2 weekends, and my wife's in both of them. So I'm like, stop being so popular. Like, you got to cut that out. We got to And
you're the errand boy then.
Oh, 100%.
Like,
yeah. This
you
weekend,
give mad errand boy vibes.
This weekend, and, we like having one car there and make it easier because apparently everybody that we are in a wedding with does not live close to us. So we're driving at least an hour.
Mm-hmm.
So I'm going Saturday morning, driving an hour at 9 a.m. on my Saturday, dropping her off. And then she's like, see you at 6. Like, what?
But then is she, because in that scenario, like when I've been in weddings, it's like, all right, let me call my husband. He's going to go
100%.
pick up breakfast.
Yeah,
or
100%.
Like, we need to run this dress.
It'll be like 11:30. Be like, Logan, here's the list of things we need. Yeah.
Yep.
No, I've been there, done that. It's going to be another weekend just like that. It'd be glorious. Wonderful. Okay. Okay, let's go. Let's move on. We have things to talk about. I don't want to get angry about that. Okay, Allie, we have started this series. Quint and I just did an episode where we talked about what this means for the market, what the Big Beautiful Bill, the One Big Beautiful Bill Act means for the markets and what that is doing. But there's a lot of misinformation out there about, like, what is actually the changes that are happening with the bill. One of the ones we're going to tackle today, and we do have our fancy dancy notes for those that are watching us on YouTube because it is a little bit intricate, is talking about the changes of the taxes on tips and overtime. Now, in our next episode that you and I are going to go in depth on, that is maybe not for everybody that's listening, but for their parents and things, is the changes of taxes for Social Security, because that one, people are missing the mark too. These are the same ways. Like, there's propaganda out there, or there's news out there that there's no tips on, or no taxes on tips, or there's no taxes on overtime. It's not quite how all of this is working. So I want to get into it a little bit, but we're going to use a lot of tax terms, right? We're going to use a lot of terms in the industry, and that's how the bill is written. And the big thing is that these are not eliminating taxes, but they're adding tax deductions.
So reducing, you could say.
Yes.
Tax, not eliminating.
Exactly. So it's a deduction. What is the difference? Because these terms are thrown out all the time, and there is stuff in this bill like child tax credit. But when we talk about overtime or we talk about tips, it has to do with deductions. So what's the difference in a tax deduction and a tax credit?
Yeah, that's a great place to start. So a deduction, a lot of times they'll say it's an above-the-line deduction. And what the line, I'm using air quotes for those who aren't watching this video, the line is basically when they start applying tax to the number. So above the line deduction means, let's say, I'm going to use an example, you make $100,000 at your job, you have a $20,000 above the line deduction. Okay, so when they're doing your taxes, then they'll say, okay, $100,000 income minus $20,000 deduction gives you $80,000 taxable income. Then they take that $80,000, they run it through the tax brackets, and that's how they determine your tax. So that's a deduction. Now, credit is better in mind, because what that means is, let's say, now they don't have $20,000 credits, but just for sake of using some numbers here, let's say I have a $100,000 income, $20,000 credit. Well, now they say, okay, I have $100,000. I don't have any above the line deductions, so I have $100,000 of taxable income. Now they throw that through the brackets. They come up with your tax amount. I have no idea off the top of my head what that is, but we'll say it's $15,000. Okay, well now guess what? I have a $20,000 credit. It's like, now I've got a gift card to the IRS. So I apply that $20,000 credit. Before you know it, now I owe 0 taxes, or depending on if it's a credit, which I'm not going to get into this, but the math didn't work out. I should have picked different numbers. They might even owe me $5,000, because a credit applies to the tax that you owe. A deduction applies against the income before they apply the tax.
Yeah, I really like that you said the gift card thing, because I was thinking about this scenario the other day. It's like when you go to a restaurant and you have a $100 bill that you got your meal and it cost $100, and a deduction is like a coupon. Like, okay, you got a coupon, you got $20 off, or you got 20% off, or something like that. And then if you were just buying the $100 meal, they calculate sales tax on that, and let's say it's $6 in Kentucky. But now if you have your coupon, it's an $80 meal after you get your $20 off, and now you have a 6% on that, right? So it recalculates after you take the coupon off is your deduction, right? And then just like you said, your credit is a gift card. Your gift card that's coming in, and you can put it down, and it'll pay for the taxes, it'll pay for the meal. It's a nice bonus that's basically paying for those taxes outright and reducing what you actually owe on the bottom line. So then we get to the misnomer is that, okay, overtime and tips, those are gone, but actually the taxes on those are gone, but actually they're deductions. So talk a little bit about what deductions are on this law.
Mm-hmm. Yep. So there's a couple different numbers, one for overtime, one for tips. And I'm just going to commend Logan is our resident expert in this law at Jewel Financial. And so I'll kick it to you a little bit for some of the details, but applying kind of that idea of, okay, I've got a coupon versus I have a gift card. Here, the coupon, just to continue on with that example, for overtime is $12,500 for single filers, and then for joint, you get double that, $25,000, which means what they're going to do here is when you get your W-2 from your employer, let's say it says $100,000, and I have no idea, maybe I have no idea right now how this will physically play out. They have not worked out those kinks as far as I know of okay, we're going to report it, and then your employer's going to tell you this much is overtime, or maybe they don't report it. Who knows? But at the end of the day, I have $100,000 of wages. I have $20,000 in overtime. Okay, I get to apply this coupon. The first $12,500 is not going to count. So that's overtime. Tips is a little bit different because you get up to $25,000, whether you're individual or joint, right? So you'll get a little bit more of a benefit in that regard if you're a single filer, that you get to actually use that same coupon, whether you're single, whether you're joint.
Yeah, exactly right. So that's perfect. And overtime and tips are obviously different, and there's different industries that use them. So you can apply these deductions just like you can the standard deduction. So most Americans use a standard deduction. They get income, and then they have their standard deduction. I'm just going to use round numbers. This is not exactly correct, but $15,000 for a single filer and $30,000 for joint filers is your standard deduction that reduces your amount of income. It's your coupon. Well, now you got an additional coupon if you have tips or if you have overtime. So I have read that the IRS is gonna make employers break out what their overtime is. They already make them break out tips. So you'll have different boxes on your W-2 in all likelihood that show this is how much you have for overtime, this is how much you have for tips, and most people will probably be able to deduct most, if not all of that, because $12,500 on overtime if you're single, $25,000 on tips, or $25,000 on overtime if you're married filing jointly. That's quite a bit of money that most people don't necessarily get.
I think that's why this rumor is spreading, oh, well, you're just not going to pay it, because for some people that might be the case, but that doesn't perfectly apply because there's also phase outs. So why don't you talk about what income level does this not apply to me and how that all kind of works?
Yeah, so say you're a really high earner and you're making quite a bit of money in your space and you get overtime pay. Well, if you're single filer, after $150,000 of income, you start to phase out of being able to get this deduction. There's some complicated math behind it, and one of the big themes of this entire episode is just wait and see, because the IRS is going to publish more on this. They're going to talk about what they envision from the bill and what they're reading from it. So you'll get more information on this. But effectively, if you're over $150,000 as a single filer, you're going to phase out of both of these, the tips and the overtime, and it's $300,000 for joint filers. So it's actually nice that they made those numbers the same, makes it a little bit easier, but that's important to think about. If you have really high income and you're getting tips from maybe a side business or something, or if you have overtime pay, you might start phasing out of that depending on where your income falls. Now, here's another thing. I've had people that have come up to me this other week and, jokingly saying, oh, well, I'm just going to start getting tips at my finance job or my account. I'm going to get tips all the time. I'm going to love that.
Just for tips
yeah,
now.
Exactly.
Hey-o.
I'm going to just tips. Well, it's not the case. You have to be in an occupation. Now, this is vague in what they said in the bill. You have to be in an occupation that traditionally has tips. So it's not just restaurants. It's, Uber drivers or it's hairdressers. There's a lot of different places that people get tips, but you have to be in one of those occupations that typically has something like that.
Yeah. And over time, this is going to change things for people, but, I'll address the elephant in the room. For a lot of people who have occupations with tips, they may not have ever been reporting this. So now, am I saying that's right? Because this is a legal show, look at me in the camera. I'm not saying that's right. You shouldn't do it that way. But for a lot of people who get tips, they're kind of like, okay, so what?
Yeah, they're taking cash,
because there's a lot of people who aren't reporting those cash tips as you should.
Yeah, and I'd say some of the pushback on this, like no tax on tips, has been most people that are getting tips might be under a standard deduction already. So, your part-time bartenders, your part-time waitresses and waiters that are going and working over the summer from their college job or something, they're not going to even hit the threshold in all likelihood of the $15,000 or the $30,000 standard deduction for single or joint filers. So this isn't even going to apply to them really because they're not paying taxes on those dollars anyways. But it could be for someone that's full-time. And another thing to think about is if you have multiple different jobs, all the numbers are the same, but you might get tips from one job, overtime from another, and tips from another place. You could be a lot of people that do work in the tip industry have multiple different jobs.
Yeah, and a lot of the tip industry jobs, a lot of people are part-time, so they're not bringing as much income. So exactly what you said, let's say the standard deduction is $15,000. I think it actually went up with this bill a hair, but we're not going to address it. $15,750.
Yeah,
whatever.
right.
$15,000. We'll call it. And then you have that $25,000 because you're single on tips. Well, now until you have $40,000 of income in general, because you get 25 coupon, we'll call it, for this new law that passed, you already got a $15,000 coupon for being alive and breathing, I suppose. Well, now, unless you're making over $40,000 in that tip job in general, you're not going to have income tax, which is where I think some of the rumor is going around of like, all right, never paying tax again,
right.
No problem.
Yes,
but
exactly.
It doesn't work out quite like that.
Be careful out there. I mean, that's really what we're trying to say is be careful because we don't know all the rules. The IRS is going to come out with more of this. They will come out and they will report on what they interpreted from the law that is now in place. So they will say how this is actually going to work, how logistically employers are going to have to do things, how the employee is going to have to do things, how you're going to report it on your taxes. So don't run out and make big changes today. I think it's important to know, too, for most people that are getting taxes withheld correctly on their W-2, you might not see anything happen, no changes, you're not getting more money in your paycheck until you get to April of next year and you get your refund from your taxes, right? It is backward looking for all of 2025, so that's important. You might not actually see some of this money coming to your bottom line until April of next year or whenever you file your taxes for 2025. But if we do get IRS clarification, if we get publications that come out, if they explain all of this, one thing you can do actively as someone out there that is in a tip industry or is in an overtime industry is you can go to your HR department and you can say, hey, I want to adjust my withholdings. I want to make some adjustments to those, lower what I'm withholding from taxes so I get more money into each and every paycheck. I don't need to be giving the government more than what they're owed now that this law is in place. I think that's all I got.
Yeah, and I would be curious to know if they'll do a translation for the tip industry on how they do the withholdings. They might automatically just adjust that. So I would maybe hit pause. This came out last week when we're recording this. So it'll be a long time knowing the IRS, God bless them, before they actually have any specific rules and how is this all going to translate, and I wouldn't be surprised if it even got pushed out. So
for sure,
we'll keep you guys posted as we know. But anything else we didn't hit on?
I think that's it.
Hats off to you, Logan, as the resident expert of this new big beautiful bill, and we have a couple more episodes coming, I think, on this, so stay tuned. Okay, friends, secret to wealth is very simple. Live on less than you make, invest the rest, and do so for a very long time. Make it a great one.